This next segment is especially true because of all that we've been talking about with the economy as well.
Yeah, exactly. If dealing with the downturn in the economy wasn't enough for all of you out there and us, now we're hearing that there are certain loan companies taking advantage of the situation.
It's a practice called predatory lending, and it's currently on the rise. But there are some options for those who find themselves trapped in the situation. Jim Sanderson, Chief Legal Counsel for U.S. Loan and Auditors, is here to help. Good morning, Jim.
Yeah,
good morning.
Thanks for coming on the show. Okay, first off, tell us what U.S. loan auditors do.
Basically, provide investigative services to figure out what has occurred in the formation of these loans, and if you're a victim of predatory lending.
Are you busier these days because of the economy? I mean, is that the reason?
Well, it is not only the economy, but finally people are beginning to realize just what a disaster these loans were. If this had been a product, a widget, everybody would be in jail that had anything to do with it. Basically the banks set up people to fail so that they could recycle the loans as quickly as possible, sucking as much equity out of people's houses and putting them in as terrible a situation as possible.
And even possibly leading them to default on the loan?
Absolutely. If they weren't, and the whole thing was premised on the fact that they would force them into a refi to keep the thing going. Well, that collapsed when the housing market collapsed. Now nobody can do that refi, which then has led to substantial numbers, unprecedented numbers of foreclosures.
Jim, how does U.S. Auditors differ from, say, a loan modification program agency?
Real simple. We don't do loan modifications. We do the investigative services, forward our findings to attorneys that file lawsuits in federal court against the lenders. And they seek to one of the problems with loan modifications is that the loans have been securitized. They've been put into huge pools, put into these securitized trusts where they've gone and done a filing with the Security and Exchange Commission, got that Moody's rating, the AIG insurance, all that stuff, and then sold out on Wall Street. Who owns the loan? We have no idea. And in order to change the terms of the loan, the only changes that are allowed are those that are within the confines of the pooling and servicing agreement when they created this trust. So, and by the way, those pooling and servicing agreements do not allow for a net loss of any type to the investors. So, the modifications just simply don't work. The only way they can work is if they're pulled out and taken under the auspice of, say, a federal judge.
Now, when it comes to the term predatory lending, who is most at risk? Would you say it's the elderly or people who don't speak the language, English, very well?
Those are
or anybody?
Truly anybody. The ones that get slaughtered are elderly and and kind of your lower income types, because they were basically given things that were over their head, and then their whole life gets slaughtered by it. Their life savings goes, they run up all their credit cards to try to support this thing, and then are thrown out of their house with, now they have no credit, no ability to get the rental properties. You know, it's just their lives have been completely destroyed. It's just a incredibly frustrating and maddening thing, and it's just done by pure greed and arrogance on the part of these lenders.
Jim, how do you know if you have been, in fact, a victim of predatory lending? What is kind of the definition of what that would be?
Well, predatory lending is a lay term that involves the violations of Truth in Lending Act, the Real Estate Settlement Procedures Act, maybe the Homeowners Equity Protection Act, plus just fraud in the formation of the loan and so on. Tattletale signs would be the Alt-A, the pick-a-pay type loans, okay, the adjustable rate loans, your stated income loans, things like that. Stated income has been one of the worst, because what occurred most often is that the loan officer or broker would look at the underwriter and say, what would I need to fund this loan, and that's what would go onto the loan application. All of that hidden from the borrower. They weren't allowed to see these things. They weren't given the documents before closing, and they weren't allowed to review them at closing.
Okay.
It was just quick sign here, sign here, sign here. Don't worry about it.
How can people get more information or get a free consultation for an audit like
Call
this, Jim?
Call us. 888-55-AUDIT. It's a free consultation. We can look at the docs and look over the situation and give you kind of a heads up on what's gone on with your loan. And then if the loan appears to be fraudulent, it's referred out to an attorney for review and final decision.
Okay. Jim Sanderson, thank you so much for coming on the show.
Thank you.
Thank you,
Good
Jim.
information.
This segment was paid for by U.S. Loan Auditors.